Hey Vegas, thank you for joining us on Realty Check. I'm your host Trish Williams, and we are still in our 7-part loan series, our financing series, where we're going to talk about all the different ways you can finance a home or a fourplex, because today we're talking about fourplex and multi-units. We have our guest. He is a repeat guest on this show, Gregory Cook with Castle & Cook Mortgage. Thank you, Gregory, for joining us again.
Good morning. Thank you very much. Repeat, yeah. Do you watch SNL?
SNL, yes.
They have those repeat shows on there where they're part of the 5-time club or 8-time club. So yeah. I'm honored to be on here for the 3rd time.
Yes, you're part of our 3rd-time club so far. Most definitely, you're very informational and very good at explaining everything, which I appreciate. Why you're here and why I work with you.
Wonderful. Thank you. Good morning.
Appreciate that. Good morning, Greg. So today we're going to talk about how to purchase a fourplex. Now, I had a friend when I was in high school. She actually, her dad owned this whole building, and I used to think like, wow, that's amazing. You know, like they must be rich or whatever. You don't, your perception when you're younger, you don't really understand how things work. But I was like, how he owns all these units here, and all the people here are paying him rent, and they lived in one of the units there, and they're basically live for free because making rent off all the other units, which we're paying for them, which is amazing. And we're going to tell you how you can do that.
Yep, fantastic.
Yep. So, Greg, to get started, what is a multi-unit? What qualifies, what justifies, what is a multi-unit versus a single family?
Yep, absolutely. So a multi-unit is any property that has more than one unit on the same APN or the assessor parcel number. So if it's one assessor parcel number and it has a duplex, triplex, or a fourplex, that's a multiplex, a multi-unit. In the residential side, anything above fourplex is then considered non-residential apartments, things like that. Then it gets more into commercial lending.
Okay, great. So what we're going to be talking about today is 4 units or less, because that would qualify as residential. Doesn't mean you can't buy 6 units or more, or I'm 5 units, 5 or more. I just jumped to 6. 5 or more, but that's not what we're discussing today. Today we're talking about 4 or less that you can purchase as an owner-occupant.
Yes, absolutely. It's a great program.
Yes, perfect. So purchasing these, you can purchase this with an FHA, a VA, or a conventional loan?
Yes.
Yep. Okay. And what's the difference? If you're making that decision and you're going to purchase this, what would be the difference in that?
So typically, if you're going to buy a multi-unit as a conventional loan, they're immediately going to look at it as a non-owner occupant or an investment property.
Okay.
Much larger down payment requirements, 20, 25% if you're going to try to buy something conventional as a multi-unit.
Now, if you buy conventional, do you have to live in one of the units? If you're buying it as an investment property, can you rent out all 4 units if you choose?
You can rent out all 4 units, or you could live in one. But
okay.
Yes.
So it's up to you how you do that.
But it's still considered an investment property.
Okay. And then FHA and VA, what's the difference there?
FHA and VA, you're required to live in one of the units. So as you purchase it, if it's a fourplex, 3 of them can be occupied. 1 of them needs to be vacant by the time you close so that you can move into one of them. And then it's considered an owner-occupied purchase, FHA or VA.
Okay, perfect. Now, what if you're purchasing the unit and the other 3 are not rented out yet? Do they have to be rented out in order to make the purchase if you're purchasing as an owner-occupant?
No, good question. It doesn't have to be rented out, but then the lender cannot use that rental income to help you qualify. And that's the great thing about whether it's an FHA loan or a VA loan is you'll be able to use that rental income. The appraiser is going to look and see what the rents are actually renting for. Potential rents will come up in the appraisal process and then allow you to use that to help you qualify the unit.
Okay. That's a great question about the appraisal process, because the first time I did this, I didn't realize that on fourplexes, the appraisal is not just an appraisal of value. They actually review those rent rolls to make sure that it's making enough income for the qualification, which I feel like is a very good protection for the buyer as well.
It's good, absolutely. So the buyer, when they're buying the unit, they're expecting that the rents are $700, $800, $900, and then the appraiser is protecting you as the consumer, the borrower, and also the lender. So they'll receive rental contracts. They'll look online to see what the area is renting for, and knock on a door or two if they need to make sure that the units are occupied.
Yeah, to make sure that someone's actually there and they're not fake lease agreements, because let's be honest, it can happen, right?
Absolutely.
And
Yep.
I'm sure it has,
Yep.
but that's just, that's the wild west of real estate, unfortunately.
Yep, absolutely.
Yes. So, okay, so are there loan limits on, different FHA, VA, and conventional?
Yes. So on the conventional side, you follow the Fannie Mae and Freddie Mac guidelines, which right now anything below, I think it's $458,560 is considered a non-jumbo loan on the conventional side. Okay. For VA, a lot of people don't realize this, is VA no longer has any loan limits.
Which is awesome.
So whether you're in LA or Las Vegas, if the Four-Plex is something is $800,000-$900,000 and you can afford it, if the rentals help you purchase it, there's no loan limits.
That's amazing.
On FHA, it's county by county specific. So in Las Vegas, Clark County, it's basically $360,000 for FHA for a single family residence. It's in the 4s for duplex, in the 5s for a triplex, and just under $700,000 for a fourplex.
Wow.
So, and that means you're buying a fourplex with 3.5% down payment, and then allowing the other 3 units to help you qualify for that.
That is so amazing. And one thing that I do want to tell the audience out there is when we're talking about loan limits, interest rates, anything like that, those things will change. They can change all the time.
Right.
Sometimes they can change quickly. You may be watching this video in a year. You may be watching it next month,
Right.
and it's going to change.
Absolutely.
So definitely you need to call us to verify loan limits, rates, anything that we're talking about. We'll be able to tell you what today criteria is.
Yep, absolutely.
So that's going to be very important for everybody to understand. Whatever they are today may not be what they are tomorrow.
Exactly. So we don't want to discuss rates. It's just a matter of rates are great right now, and they're likely going to be great in the foreseeable future, solid. So Trish and I would guide you through that process to help you qualify for one.
Yeah, most definitely. But you have some days where rate is a certain rate today, and then tomorrow you're like, whoa, what happened?
Yep, exactly.
So and then the next day it's okay again. So it's definitely just call at the time of the phone call. We'll direct you on whatever the criteria is now. Now, if you're buying this as an owner-occupant, you're living here in one of the units, you're making income off of the other rental units, the other units that are there. Is this now an investment property? Is this considered an investment property?
So it's a income producing non-investment property. Because you're living in one of the units, it's owner-occupied. But as far as at the end of the year, when you take your information to your tax person, if you're producing income on the other property, it's just regular income towards that. Speak to your tax person, but it is not in the lender's eyes considered an investment property, which would then kick in and require a much larger down payment, like on the conventional side.
Okay, great. And that's another important thing too. Is it feels, when you look at it, it's like, wow, it just feels like almost unfair that you can live somewhere for free and have all of but it's not unfair. It's great. It's a beautiful thing.
It's one of the maybe best kept secrets out there. I didn't learn about it until I was deep into my lending career. I wish I had done one when I, instead of buying my first single family residence. It's a great way to start out. Let's be honest, a long-term investment portfolio that could be that cash flow that you need while you're in retirement.
Yeah.
So.
Later on in life, like today, definitely have a big family, need bigger space.
Right.
Can't really, all go into a fourplex or one unit and live comfortably. So when you're in your younger years, as you're building that up, yes, for your first purchase, oh my goodness, that would be
shoulda, woulda, coulda. Yep.
Shoulda, woulda, coulda. Yeah, and I'm sure prices were a lot better back then too.
Right.
If you only knew, and if you only understood. If it was, I feel like it's one of those things that's just not commonly talked about that people don't understand.
Right.
But that is definitely a great thing. And just think about it. When you rent your first apartment, is it any different?
Right.
Is it any different than your first apartment?
Right.
And if you can afford the rent, you can afford this because literally you can. There is a way of doing it to where you're not paying rent.
Mm-hmm.
You're going to be living a lot less per month than you would in an apartment.
It could be easier to qualify for a $500,000 triplex or fourplex than it could be for an FHA borrower to qualify for a $300,000 single family residence, because you have that income from those other units helping you qualify. When you're buying a $350,000 single family residence, you have to qualify for that entire down payment on your own. If it goes to $400,000 or $500,000, sure, the payment's higher, but now you have 3 other people helping you pay for it. Sometimes you're buying much over your limits. Yep.
Yeah, absolutely. Absolutely. It's such a great potential for the future.
Yep.
Now, we just talked about this a little bit, but I want to go back into it. If, for instance, your qualifications, say I called you, Greg, and I said, I want to buy a house,
yes.
single family residence, and you ran my numbers and you said, okay, you qualify for $300,000.
Yes.
Okay. Later on, I changed my mind because I heard about fourplexes. I didn't know how it works, but I said, that is what I want. That makes perfect sense. I would love to get my foot in the door on a future investment and do this, purchase a fourplex. Okay. So the only thing is I can't find one for $300,000.
Right.
If you qualified me for a single family residence at $300,000, does that mean that that's the most I can spend on a fourplex?
No, not at all. So the Clark County limits again allow you to buy still with just a 3.5% down payment for triplex, fourplex, duplex, and then depending on what the other rentals are, the rental income per unit, that's going to allow you to qualify for more than that. So imagine trying to find an apartment in Las Vegas where the rents, a regular apartment where the rents are below $1,000 a month. There's not many, but on these duplexes, triplexes, and fourplexes, the rents on them they're going up. They're starting in the $700-800 range, some $900 to $1,000, and so you now have an extra $2,400 helping you qualify. It's great. It's definitely, you can buy into the $400,000-500,000 range.
So if your qualification, if you're out there shopping and you've decided you don't want a regular house, you want to do one of these multifamily units, definitely you want to discuss what that qualification is because it changes depending on the income from the other units. That is also a very good point there when you talk about rent, because the rents are typically lower than apartments or condos or anything like that. I seldomly see vacancies.
Right.
And if they're vacant, they're seldomly vacant for long because there's always people looking for affordable housing here in the city, especially now. I mean, housing inventory's drained or, so low, but rental inventory, oh my gosh, have you talked to anybody that's looking for a rental these days? It's insane.
The property managers tell you that they're all super busy with their rentals, that just a lot of still influx coming in from California. It's still a good jobs market and it's going to get even better. So yeah, the rents are full.
Yeah. And I was speaking to a property manager, a couple of them recently. They've moved their criteria to qualify for a rental to 650 credit score. Yep. You have to have a 650 credit score and 3 times the amount of the rent coming in.
Rental income. Yep.
At that point, why aren't you buying? Like that makes no sense. That's a no-brainer.
It's a good point because FHA typically would like to see you at a 640 credit score. And if you have 3 months of rent for the landlord to hold on to, it means you have very close to, if not 3.5% down payment to buy something on your own. So
yeah, and that's it. And I've talked to people too. They're like, well, will they make exceptions on the rental application or anything? No, they won't, because there's 20 applications and all the other people meet this criteria, so they're not.
Now you can bring your dog because it's your it's your fourplex, so you can put your dog in your unit.
Yeah.
Doesn't mean you need to let your tenants have dogs, but yeah.
Yeah, you make the rules.
Yep.
Yeah, you make the rules.
It's a great way to dip your toe into investing because now you live in one, you can property manage the other 3 units because you're there. If you're a little bit handy, you can probably take care of it on your own or outsource it, but it's a great way to start that investment portfolio.
Right. And I also like that the units are, one thing that I tell people when they're looking to buy their first investment property or their first rental, when we're talking even single family residences, when they're purchasing their first one, you want to kind of make sure your square footage is not too much. Because you're going to have to learn. It's a learning curve. If you're going to self-manage, you're going to have to learn like maintenance and repairs and things like that. And you don't want to buy your first investment property or rental is like this massive house that has, 6 bedrooms and 4 bathrooms and things start breaking and you're like, oh my gosh, you're overwhelmed. So when we're talking fourplexes, they're small units, so there's not a lot to, there's not as much that could go wrong.
Right.
And there's so many being renovated these days. There's so many that are being completely remodeled that are coming on the market and turning around and they're doing a really good job at it. So there's definitely, as far as maintenance goes, it's making it easier on people.
And typically, I think your tenants are going to take care of the place a little better because they know the landlord's living in the building. I mean, absolutely. When you're there and they have to walk in front of you and you're not taking care of it, they'll be a better tenant when you're in the building.
Absolutely. Absolutely. I agree with that too. So are there specific requirements? So if someone says, hey, I want to purchase a multi-unit home, I want to do this, I want to buy it, owner-occupant, what things are required? What requirements, if there's anything that we haven't touched already?
Right, absolutely. So the general requirements for buying a multi-unit are very similar for FHA if you're buying a single-family residence that they are. So still same 3.5% down payment. Still the same debt to income allowances. So FHA goes up to a 56.99% debt to income allowance, which means your total income divided by your total expenses, including the home, can't go over 56%. But again, remember, you're having the other units help you qualify, the other rental incomes help you qualify. On VA, it goes even higher.
Can I stop you there for a second just to explain that to everybody on how the other rental income help you qualify? Say that you're making, let's say $4,000 a month, just to keep numbers simple, and the rent on the other units equals out to $2,500 a month. Now your qualification income, instead of being $4,000 a month that you have to qualify with, you now get to qualify with the amount of $6,500 a month because whatever rents you're receiving add to that qualification amount.
Correct.
Am I right?
Correct. Yep.
Yeah. So that's what helps you qualify for a higher amount because of the rental income you're receiving.
Yes. Depending on your credit score, they may want to see a month or 2 of reserves. They want to know, hey, if one of your tenants moves out 1 month, are you still going to be okay to be able to make a mortgage payment with them moving out? The only other thing that we've seen that's a little bit different is you cannot own another property. So if you have a single family residence right now and you're trying to buy a fourplex, you cannot do that. We have
as an owner-occupant or as an investor?
As an owner-occupant.
Okay.
So if you sell the other property, Trish and I had a client just like that, recently sold his property and then bought the fourplex, completely okay. That you can do. But for them, FHA really wants to know that you're buying it as an owner-occupant, that you're not buying it really for the idea that it's an investment, because they've had problems with that in the past. So yeah, you cannot own another property at the time. The only 2 other things, caveats would say, normally on an FHA single family residence, you can have mom and dad help you qualify to help your debt to income ratio. If the property doesn't pencil out, you can have a non-owner occupant help you qualify.
Like a cosigner?
A cosigner, just like if you were buying a car.
Okay.
When you're buying a multi-unit, you cannot do that because then obviously it's not quite penciling out. Then the down payment requirement goes from 3.5% and it's like 15% or more to buy it if you need a non-occupant cosigner, to help you buy.
Right. I'm sure that goes back down to like kind of the idea of reserves too.
Right.
They're probably, I'm sure, from the lending side, more concerned at that point if you need a cosigner to qualify, that if something goes wrong, the borrower is going to struggle making payments,
Right.
and if someone moves out or they can't rent it,
Yes.
and that's always when it boils down to it. When you talk about loan terms, qualifications, everything,
Risk.
it's the risk factor.
Right.
Yeah.
Absolutely. The last thing is it needs to make sense. So it's a little bit of a gray line, but if, like for me, I'm married with 2 kids, even if I did sell my current single-family residence, it's not going to make sense to them that I'm moving into a 2 or 3 bedroom fourplex with a family of 4.
Yeah.
I haven't played the game of, well, my kids are going to live in the other unit and I'm going to live in this one. I'll rent out the other 2. For the most part, it just needs to make sense to underwriting. That's still a little bit the human side of underwriting, is that they need to make sure that that it makes sense that you're buying this as a true owner-occupant.
And they do review that.
Yeah,
Sometimes they'll ask questions about things like that, because that is, of course, they want to make sure that people are going into this honestly.
Right.
And yeah, if you own a 3,500 square foot house right now on a half-acre lot, and you say, "Oh yeah, I just want to go live it," they're probably going to say,
Correct.
"I don't think so."
Right.
Yeah, that's
absolutely.
that's not the way it works. So definitely. Is there down payment assistance available when you purchase multi-units?
Great
because
question.
there's so many programs out there that offer down payment assistance. I'm sure they don't work for these, or do they?
They do work for these. Yep.
Wow.
Down payment assistance program to buy a multi-unit property. Yes.
Okay.
So
that's duplex,
triplex or fourplex.
Okay.
Yep.
So
Yep.
Either of them. And does it work the same way, like with the other down payment assistance programs? They'll give you basically, 3% or 5% or whatever, depending on the program that you're in. And as long as you stay there as an owner-occupant for 5 years, you don't have to pay it back.
Correct.
Is that the way it works with these?
It's the same way. Remember, and because I know we've talked about it in the show before, the debt-to-income allowances are a little bit lower for down payment assistance, but the rest of it is the grant money. The program is still the same. Yep.
Okay.
Yep.
All right. That's awesome. That's really good. And when people start with that and want to talk to you about that, you'd be able to help them with the down
Absolutely.
payment assistance program as well, and getting set up for that and seeing if they qualify.
Correct. Absolutely. Yep.
Okay. That's amazing. Now, another thing I want to talk about is if I bought this and I bought it as an owner occupant, I'm living in the unit. Say it's a year or so down the line, and I just decide that I, want a house, or maybe you meet someone, or you get married, or you have a kid, and life changes, right?
It
Life
does.
changes.
Right.
Your needs change, or maybe you want to leave the state, something like that. And I'm no longer going to occupy one of those units. Do I have to sell?
No,
what
you
do I
don't.
do?
No, you can move out. So really, FHA just wants to know that your intention was to live in the property for a year. Let's be honest, intentions can change within 6 months. As long as they feel that you're going into buying the property with the intention of occupying it for a year, you can buy the property. So,
Okay.
but
great.
no, there's no FHA loan limit, no FHA requirement. They're going to knock on your door in 13 months and say, "Hey, we thought you were still living here." So nothing like that.
Yeah, so if you maybe you're just out of college, and there's so many
way.
fourplexes over by UNLV.
Great way to do it. Yep,
Yeah,
absolutely.
And you just finished college, and now you're going towards moving on in your career. You want something a little bigger, and you can do that. You have the option to do it. No penalties or anything, as long as you've hit the requirements, and your intention was to live there as an owner occupant.
Absolutely.
It just doesn't mean you had to live there forever.
Right.
So that's a great option. And also, I don't know how this works, so definitely I'm sure people might be thinking about this too. What if I had a fourplex? I'm an owner occupant. I'm there. And I decided, maybe all of the units in that one were 1 bedroom. And I found a bigger one that had all 2-bedroom units, or they were a little bit like an upgrade from that. Been in this one a year. Can I purchase the next one as an owner-occupant, or does it not work that way?
It does not work that way. So
Okay.
you can only have one FHA loan at a time.
Okay.
Same thing with VA. You can only have one VA loan at a time. There are caveats there, but they're pretty rare. So no, they're going to realize that you had an owner-occupied fourplex before. Remember, they want to know that it's an owner-occupant. You can't own another property at the time. So at least for using FHA or VA, you cannot buy the next one unless you've sold your departing one. So,
or refinanced it maybe into
you could refinance it conventional, but remember, the next one they're going to ask, are you a homeowner? And you're going to say yes, and then trying to convince them that you're buying another 2, 3, or 4-plex as an owner-occupant, they're not going to believe it. They're going to know you're accumulating real estate, and it's not. You'd have to buy it conventional with a conventional down payment.
Yeah, 25% down,
20%,
20%.
25% down.
Yeah.
And they recently made, they increased the risk factor on investments. Basically, interest rates for investment properties are a little bit higher now.
Oh, wow.
Yep.
And that's a good point, too. Since we can't quote rates, of course, but are the rates different at all on buying a multi-unit versus buying single family?
They're a little bit higher, but it's
not much.
It's not much.
No, not much. That's there.
They add in what's called a risk factor, and it's not any different than you having a 680 credit score or a 640 credit score. They just say, hey, it's a fourplex, so we're going to bump the rate up a little bit, and but it very much still pencils out.
Okay, great. And I'm sure that I want to go back one more question before I go into the next question.
Sure.
If you're in this unit, the FHA loan, you're owner occupant, you're living in one unit, and you want to buy a house, a single family house, FHA, as your next purchase. You've already lived there for a while. Can you do that because it's considered an upgrade? I know there's some considered upgrade rule of having the next FHA loan, or is it still not qualify because you own another property?
If you wanted another FHA single family residence, you'd have to refinance out of your current one. The only time FHA really allows that is if you're moving from one market to the next, and you can prove to them, hey, I couldn't sell my house in the last market. Now I'm living in a much more expensive location like San Francisco, and really this is on VA a little bit as well. They'll allow you to get another FHA, but again, very difficult and rare.
Okay.
Rare. Yes.
And then there's also owner-occupant conventional loans out there and things like that too.
Absolutely.
Yeah.
Yes.
Yeah.
Yep.
So they're not. Sometimes I hear so many times that people think because it's conventional, it's minimum 20% down. Right. There's a lot of conventionals out there that are 3%, 5%,
3% down on conventional. So I think what I would probably recommend is if you did buy a fourplex FHA, one, you might want to refinance that into a conventional, because remember on FHA you're going to have mortgage insurance, and if your property value's gone up, you have good credit, you'll be able to reduce your mortgage payment so that now you're cash flowing even more because now you've added a fourth tenant because you're moving out, and that's going to allow you then to qualify for your next move up property, owner occupied single family residence.
Right.
Yep.
Right. Perfect. And when we did the last fourplex we actually went. You came along with the inspection.
Yep.
So
I wanted to see it. It was a great unit.
That was great. It was a great unit, the home inspection. But being there, obviously your home inspection takes a little bit longer. It's going to cost a little bit more than on a traditional single family residence.
Good point. Same thing in the appraisal. Appraisal's a little bit more expensive.
Yeah. So you do have a little more upfront fees. I've been surprised. Property taxes are not as high as I thought they would be on these multi-units. I had assumed they would be much higher, but so far looking at them, I think it's because it's just one APM number. They're not counting it as 4 units. I always thought it would be like what you would expect traditional property tax by 4, but in Nevada we have a weird formula for property taxes anyway. So
it's an excellent point, because remember, if you're buying a property, an investment property, then the county assessor can raise your property taxes faster because you're not living in it as an owner-occupant. Our client that recently purchased, he bought the fourplex, he's living in one of them, so his property taxes are going to crawl up. They will increase very slowly, versus if he had bought that as an investment fourplex, his property tax base would have gone up faster.
Yeah.
So,
and that's such a good point too when you talk about property taxes, investment versus owner occupant on any property taxes, whether you're buying a multi-unit or anything like that. If you do not know, and I do some social media posts about this every once in a while right before they send those cards out, and I've had people that, friends or clients or whatever that did not realize that you actually get a reduction for being an owner-occupant. And it's not automatic. Sometimes, when things get processed, they're not processed correctly or the box isn't checked. You really need to go on, and
Absolutely.
I can show you how to check your APN number, to check your tax rate, to make sure that you're getting the owner-occupant tax reduction, property tax reduction that you should be getting, because, who wants to say no to money?
Right. The county doesn't always know. This is all computer automated, and believe me, they'd like to grab more property taxes from you, but you need to let them know, and they'll change it.
It's easy. It's easy. It's just a phone call or a click of the button on your account. It's really easy to check, and it's very easy to fix.
Absolutely.
So definitely you want to look into that, because it's I can't remember the rate difference off the top of my head. I have to look it up, but there is a difference, and it saves you money, and we all love saving money.
Absolutely.
Yeah, especially when it comes to taxes. So definitely those are things that that I can help you with if you want to look into that. The other thing is, sometimes in these fourplexes, there are associations.
Yes.
Yes, so just as if you were to have a homeowners association with a condo or a townhouse or something like that, or a house even, you are you have to abide by the rules and regulations of the community. And sometimes they have amenities, pool, gated. There's some that are gated. So there's different things there. And you have your homeowners association dues that is going to be factored into that.
Right.
There are a few out there that don't have them.
Absolutely. The one we recently didn't have one, and you need to qualify with that amount on top of that. So whatever your mortgage payment is, plus the HOA, you need to qualify that with in there. So some of them are $200 or $300 a month, some are zero, but yes, and it's good because pools and things. It makes it really like feeling like in a townhome or a regular condo with the amenities.
Yeah, the amenities, and those are the association dues. Basically covers the maintenance on the amenities. You don't need to do that, but you are responsible for like your roof, your exterior, your your unit. Sometimes when you go into these communities that have multi-units, you're like, some of them are amazing, they look beautiful, the other ones don't, and you're like, what's going on? It just depends on who owns the unit and how good they're taking care of it. All right. Well, Greg, it's been great talking to you again.
Thank you.
I always love having you here on the show. If people want to talk to you, they want to get started, they want to get their qualification going, how easy is it to start an application with you?
Give me a call. Love to chat about it first. That's the easiest way, because you'll have questions, and then a lot of people like to do things on their phone, online. I can send you a link right to your phone, or we can do it in person or Zoom if that's what you prefer. But I'm at 702-324-6229.
Okay, great. And yes, Greg does still do, in-person meetings if necessary, but Zoom's also great. If you prefer not, you just want to get your app started. He has a very easy, user-friendly application to use. So, you're in good hands.
Thank you.
And Greg's always happy to answer questions. So you can call in with questions, see if it's right for you, see if it's the right choice. You can call me. I can even, if you call me, I can even, send you some options, some samples of what you could be looking into, just so you can see what.
Right, and we'd pencil it out, because you may look at one $500,000 triplex and the numbers don't allow you to qualify, and then the one down the street or a different zip code allows you to qualify. So there'll be a little of that bouncing back and forth, but yeah, it works out.
Yeah, most definitely. And if you guys need to reach me, 702-308-2878. And we're going to be in this financial series for a few more weeks. We have a lot of good content for you guys coming up. So stay tuned, learn about all the different options that you have out there for purchasing real estate, because there's so many options, so many different ways to purchase real estate, and such a good investment in for yourself, your future, your portfolio. And, long-term real estate, long-term usually is a very wise move. I've actually never seen a case where it's not a wise move. Long-term.
It's all timing.
Yeah, it's all timing. Sometimes short-term doesn't work out too well, but long-term is usually a very good choice for you. So you can always contact me, and stay tuned to our show. If you're watching the show, please take a moment to write us a review, download it, share it with your friends, follow us on social media, and we look forward to seeing you guys next week on Realty Check.
Thank you.
Thank you.